Take a highly profitable dairy farmer. His business is growing, his daily production is high, and he has steady cash flow, yet he is locked out of the formal banking sector. Banks require a very specific paper trail to underwrite a loan. Without formal GST tax records or registered land documents, his application is denied. The reality of his operation, gallons of milk produced daily and consistent revenue, is completely invisible to the financial system. His physical assets simply don't translate into recognized collateral. Millions of profitable entrepreneurs are stuck in this exact same loop. Proving their worth requires tracking down physical stacks of paper from completely disconnected government and private databases. India's economy has plenty of capital to lend and plenty of reliable borrowers who need it. The actual barrier is this severe lack of accessible, verified data. To fix this, the Reserve Bank of India is constructing a new piece of public infrastructure. This is called the Unified Lending Interface, or ULI. It doesn't hold money or issue loans. It operates entirely as an invisible digital bridge. This diagram shows the core architecture of ULI, which uses application programming interfaces, or APIs, software intermediaries that allow two different applications to talk to each other. Here, ULI sits directly between data providers on the left and lenders on the right. Instead of requiring traditional tax forms, this system pulls alternative, real-time metrics. Daily milk supply logs, digital merchant sales, and agricultural crop data flow straight from the providers into the network. When a borrower applies for a loan, they authorize a data pull. With a single click of digital consent, the system aggregates those scattered financial footprints and delivers a verified profile directly to the bank. What historically took loan officers weeks of manual verification across multiple branches now completes itself in seconds. Digitally native fintech companies are positioned to benefit heavily here. Because the infrastructure relies entirely on fast automated APIs, they can scale across the country much faster than traditional brick-and-mortar banks. By unlocking credit for millions of small businesses, the entire consumer economy expands. But removing friction introduces a distinct hazard. Moving debt is not the same as moving cash. When someone uses UPI, the system transfers money they already own. When a bank uses ULI, it is handing over its own capital based entirely on a mathematical projection of trust. This chart illustrates the threat of accelerated lending. If algorithms lower their underwriting standards to aggressively capture market share, a spike in instant loan approvals will quickly be followed by a spike in default rates across the economy. For the dairy farmer we met earlier, his daily milk supply records now function as perfect digital collateral, allowing his family to instantly secure the capital they need to buy new equipment. India has solved the engineering problem of distributing loans to 1 billion people. The structural challenge now is making sure they can actually pay them